Okay, dear students, in the revision session in the webinar series, the main focus is to complete of the pilot paper under 2020 curriculum for the SL3 corporate taxation. Up to now, we have done many questions in the paper. Now we are in the latter part of this paper. Then with this paper, the remaining questions, actually the two parts in the syllabus area, which is transfer pricing, regulations of transfer pricing, as well as the tax administration. In that part, we are highly theoretical. Then for the exam application, it should be for you to write the answer. Then therefore, my main focus is by going for the pilot paper questions as well as to explain the theoretical side. That's the main area. Then we will see the transfer pricing and the tax administration, how it can be, how it will be tested in your examination, as well as how the theoretical aspects of these areas is very important for your examination. In that, this is the session outline, the strategic level, corporate taxation we are in, then in the revision session of webinar series. In that, the first focus is on the transfer pricing regulations. In that, my main focus is for the pilot paper question 1 part C. In the pilot paper question 1, part A and B we have done. We have completed that part, which is non-resident and the international taxation. We have done that. Now the remaining part is the part C. We will do that today. And the second one, tax administration and case law provisions. With reference to case law provision, I will give at a glance picture of how it will be applicable and how you are going to approach to that. In that, the mainly in the tax administration part, pilot paper question 2 part C and D, and pilot paper question 3 part C Roman 1, 2 and 3. Then at finally the analysis of the questions in pilot paper. This is the main focus for today. Then we will go for directly the transfer pricing requirements in the paper, the pilot paper question. In that, the pilot paper question 1 part C, transfer pricing regulations. Before going for the transfer pricing regulation, the question itself, we will see as students what are the main areas you should know. You should know before answering this particular type of a question. In that, the main areas to study, if there is a transfer pricing question, if there is a transfer pricing question, what are the main theoretical areas you should know? The main theoretical areas are in the provisions of the Inland Revenue Act plus Gazette notification. In that, what are the provisions of Inland Revenue Act? Section 60, the 76 and the 77. 76 for the transaction between international, that's mean international transaction between associated undertakings, and the section 77, transactions between associated undertaking but domestic transactions. Please be aware on these two sections. Without knowing these two sections, it's very difficult to write a good answer for the transfer pricing question. Not a good answer at all. You are going to fail if you all don't know about this section 76, 77 and the related provisions on that, like the definition, person definition, what is the definition of arm's length pricing, like that. Then in addition to that, I have added the section 33, which is arm's length standards and arrangements between associated undertakings. In this section 33, very clearly mentioned that if there are transactions between associated undertakings or other associated person, it should be at the arm's length price, or else it should be a transaction like the transaction done with the independent person. I think it's clear. Then therefore, the arm's length pricing in between associated undertakings are very, very important. Okay. Then these are the two provisions, main two provisions, section 76 and 77. Profit and income or loss from international transactions between associates, section 76. 77, profits and income or loss from transactions between associates, domestic transactions entered with the associated undertakings, and plus section 33. Then section 78, dispute resolution, the panel. Why this kind of a provision? If there are disputes between taxpayers and the Inland Revenue officials, the person or Inland Revenue official who is handling the transfer pricing, the transfer pricing issues, he is called as a transfer pricing officer. Then with that person, that particular officer and the taxpayer, if there are any issues, then it should be resolved by the section, as per the section 78 dispute resolution panel. And the definition relevant to section 76 and the 77, for an example, person definition, who is the person, the arm's length pricing, then all these things are there. Then transfer pricing methods, where I have taken this transfer pricing methods from the Gazette notification number 2104/4 dated 31st December 2018. In this Gazette notification, it has listed out what are the associated persons, how they are going to associate with it, how we are going to determine arm's length price. Then there are 5 arm's length pricing methods: comparable uncontrolled pricing method, resale pricing method, cost plus method, profit split method, and transactional net margin method. In these 5 methods, the wide variety of using the method is the comparable uncontrolled pricing method. Now we will see how we are going to face for the transfer pricing the question at the examination. These are the main theoretical provisions you should know when it comes to the transfer pricing regulations. Then this is a pilot paper question. It's for the 7 marks. Then we will see what is the question. This is part C of the pilot paper question 1. Part C, identify the transactions having transfer pricing risk, TP risk, which minimize the income tax payment by SRCC Sri Lanka operations, and justify your position with valid argument. Now, can you remember, this is related to non-resident taxation question. There was a group SRCC and SCCC. Then under that, it is asking what are the transfer pricing risk. What is the transfer pricing risk? Is the without having arm's length pricing, if a group of company, can they minimize the tax burden? That's the question. Then any approaches, if they have done like that, then it should be rectified. As a tax consultant, it's your position. Then in the question, SRCC, the name of the SRCC, it should be SECC, not the SRCC, it should be SECC. Now we will see what is the action verb in the question. It is the identify. Then identify is in the which tier? It's a tier 1, remember. It's a tier. Then under that, recognize, establish or select after consideration. Now you have to recognize what are the transactions for the which having transfer pricing risk. Meaning of the transfer pricing risk is due to that the arrangement, the tax liability of that group will be reduced. then it is maybe arrangement. Therefore, we should rectify as a tax consultant what are the transfer pricing, the issues in the company. Due to that issue, what is the tax minimization and the recommendation to have arm's length price, what they should do. That's the process. Then how to answer. This is the answer, way of answer. How to answer. First step, identify the transaction. Without identify the transaction which has transfer pricing risk, you cannot answer. Therefore, first step, identify the transaction which are having transfer pricing impact. That's the first thing. To have a transfer pricing impact, you should have this. To have a transfer pricing impact, there should be associated persons, associated undertakings. Then first thing you have to look at whether these companies or whether these persons are associated. That's the first thing. Second one, second step, of whom. Now in the question, the SECC is the permanent establishment which we have, and it's a non-resident person with its associated undertakings. In the question, we have seen in this within the SRCC group, there is SECC, STCC China, STCC India, and there is a particular bank also. All are subsidiaries. Then according to the question, all these companies or the non-resident person, resident person, all these are associated undertakings. That's the second thing you have to identify. Third step, justify the position with valid argument. Now you have to tell there is a transaction in between associated undertaking. If there is a transaction like this, it should be ascertained under the arm's length pricing. According to given information, it has not in the arm's length pricing, then this is my recommendation. That is the way of answer. That's why step 1, 2 and 3 I have given for you to refer. Then we will see the questions. Now in the question part C, we will go for how you are going to write the answer on this. Initially when I am starting, I have mentioned that there are two main provisions, section 76 and 77. 76 is for the international transactions, 77 for the domestic transactions. Then we will see, now there are so many transactions with the associated undertakings. First, what I have done, I have highlighted the two sections, and going forward we will recognize what are the types of transactions. In that, this is extract theory provision as per the Inland Revenue Act number 24 of 2017. As per section 76, profit and income or loss from international transactions between associates, any income, gain and profit arising in, derived or accruing from in any loss incurred by any person in Sri Lanka, very important, engage in any what transaction? International transaction entered with whom? Associated enterprises. Very important. If you don't, if the company A and company B is not associated undertakings, then there is no transfer pricing risk. First thing, you have to identify whether these are associated or not. Shall ascertain having regarded to the arm's length price. It is the application of theory. It's for the international transactions, for section 77 for domestic transactions. In that, as per section 77, profit and income or losses from transaction between associates other than section 76. Any income, gain or profits arising in, derived or accruing from or any loss incurred in by any person in Sri Lanka engaged in transaction. Very important, it's very clearly given. What? Other than international transaction. If it is other than international transaction, then what? It should be domestic transactions. Then entered into with its associated enterprises. Again, the critical point is here in the transfer pricing questions, you should identify whether this is associated or not. Shall be associated, the ascertained having regarded to the arm's length price. It should be ascertained under what price? Arm's length price, or else in your word it should be as a transaction which we have done with the independent third party under the open market value. These are the two main provisions under section 76 and the 77, which is a foundation for your transfer pricing question answer. Then we will see. Now I am going to identify the transactions between associated undertakings. In the question of the non-resident taxation, if you can remember, then there is a SECC, which is our non-resident person, then SRCC, registered branch office Sri Lanka, and SRCC, the China, which is the holding company. Then SBCC, this is the bank, which is again associated undertaking. Then STCC, India, again associated company. Then STCC, China. This is the list of the company. It is the same kind of the name. It's going to complicate the students, but don't complicate. If you have very clearly identified those things, it's really easy. Then we will see the individual transactions, how I have extract this transaction in the question itself. Then we will see first transaction, income received by SECC by providing technical support for other projects operated by SRCC in Sri Lanka, LKR 14 million. In the question, this is in the other income very clearly provided. SECC is providing feasibility study support services to the other companies or other projects of the SRCC. Then again, see the relationship. It is SRCC and SECC. The SECC is the wholly owned subsidiary of the SRCC, the China. Then automatically they are become the associated person. Now that's the first thing. Now they are associated. Now they are having a transfer pricing risk. With that understanding, we will go for the answer. Now see all the background information given in the answer. Since SECC is 100% owned subsidiary of SRCC, that means under the transfer pricing, it is an associated enterprise. Holding company group can reduce income tax liability in Sri Lanka due to being associated organizations. Now they can reduce with the arrangements between these associates, they can reduce the income tax liability in Sri Lanka by applying what price in non-arm's length price for any transactions between SECC and SRCC. Now that's the first thing, identify exposure to the transfer pricing. That means we have identified the transaction in between associated undertaking. That's the first step. And the second part of that, in this scenario, now taking the information from the question, apply to the transfer pricing answer. In this scenario, payment made to SECC for providing technical support directly to SRCC in Sri Lanka if the value is less than the open market value compared with service to non-related projects in Sri Lanka. Now, for non-related companies, service fee, I have taken this from the question itself, for non-related companies, service fee LKR 30 million. We don't know what is the capacity, the volume, the time period, but it has given for non-related company 30 million revenue, for SRCC only 14 million revenue. Now see, now at a glance, if you have checked this, the revenue, there is a reduction of the other income billed to SRCC by SECC. Then there can be transfer pricing arrangement. When looking at the transaction, there can be transfer pricing arrangement for reason to what? Which reduce the tax payable in Sri Lanka. The second para what I have done, identify impact of non-arm's length pricing. What's the impact? Reduction of the tax liability in Sri Lanka. Then my recommendation, during the same period, how to mitigate this? How to mitigate transfer pricing risk? During the same period, SCCC has provided same kind of services to non-related projects in Sri Lanka. That's why it's LKR 30 million. And received income from such parties. Those transactions can be used as comparable for identifying arm's length price. On similar transaction for testing this transaction and for applying the open market value under comparable uncontrolled price method. Now you can check whether as a tax consultant you can check the transactions in between SRCC and SCCC and the SCCC and third party, whether these are in line with the open market value. That's mean, can we charge the price charged to SRCC and the price charged to third parties are same or similar. If there are adjustment, after doing any adjustment, even it is similar. Then what is the pricing method? I have used comparable uncontrolled pricing method because the pricing is available in the market for me. There are third parties which is taking service from the SCCC. Then I can, the similar service from the SRCC, then I can check the transactions in between SRCC and SCCC and the other third parties. This is the full answer for the part 1. Now see, I need to, the only thing which I need is you to follow the answer format and identify transfer pricing, the transactions exposure to transfer pricing risk. And the second transaction, net interest income received to SCCC from the deposit made in Shanghai Banking Corporation in China, which is SBCC. Now SRCC and SCCC we have done this too. Then this one, SBCC Bank. In that sense, now there is an interest income. Then it's income to SECC. Then we are paying tax on the income. Can't they reduce the interest rate? They can. Why? How they are going to reduce? What's the necessity they shall do? Because they are in the same group. They are associate. Now you have to identify that. In that, since SCCC and SBCC are, what's my main point? Associated companies. SBCC is a fully owned subsidiary of SRCC group. Then for that reason, SECC and SBCC are associates. And SRCC holding company group can reduce income tax liability in Sri Lanka by applying non-arm's length price for any transaction between SECC and SBCC. Now again, identified exposure to transfer pricing. That's the first thing. This is, Lama, you need not to think on this. This is in the question. You have to identify the transaction and write your answer. Then second one, now see how you all formulating the answer. Now you all applying the information given in the scenario to the answer. In this scenario, if SBCC, that's mean bank, apply lower interest rate, that's why I have told you this is income to one associate. Then why, as the other associate, why that company cannot reduce the interest rate? Obviously they can. Then SBCC apply lower interest rate other than open market interest rate on deposit of SECC. The interest income received by SCCC projects in Sri Lanka not reflected the open market interest income and tax liability of SECC in Sri Lanka would be less. For other projects, SBCC is charging or giving interest rate of 7%. For us, 5%. What is the reason? It is to reduce the income tax liability on interest income. Now, the second para for identify impact of non-arm's length pricing. Now, third para, I am going to give my recommendation with the most appropriate pricing method. Although SBCC is a bank, the interest rate applies for similar kind of deposit maintained with SBCC by other non-related parties, including projects in Sri Lanka, can be used as comparable for identify arm's length price for testing this transaction and also for applying open market value. Now, we are having the one of the option in the market. We can check what is the SBCC given for the other projects, similar kind of the feasibility study projects in Sri Lanka, what's the rate they have given. Then, on the other hand, the interest rate applies for similar kind of deposit maintained by Sri Lanka projects of Chinese companies with other banks. We can check the interest rates of SBCC to other customers as well as what is the interest rate SBCC given for other Chinese projects. Then we are having a comparable uncontrolled price. Then the interest rate applies for similar kind of deposit maintained by Sri Lanka projects of Chinese company with other banks. Then can be used as comparable for identify arm's length price for testing this transaction. I have given my recommendation with pricing method. What is the pricing method? Comparable uncontrolled pricing method. I think the flow of the answer you have identified by doing the repetition of the question. Then third one, the royalty payment. Royalty paid on technical know-how for using of technology developed by Shanghai Technology Corporation China, STCC China, STCC China. For the royalty, there is an amount of the royalty which we have taken under double taxation treaty. We will see that. Since SCCC and STCC are again, what is this? They are associated companies, one of the subsidiaries of SRCC. And SRCC holding company group can reduce income tax liability in Sri Lanka by applying what? Non-arm's length price. That sentence is must. You must recognize due to associated person, they can apply non-arm's length pricing. Therefore, there is a transfer pricing risk. For any transaction between SECC and STCC, that means identify exposure to transfer pricing. Then, in this scenario, see how we have analyzed the answer. In this scenario, SCCC has made material amount of payment as royalty to STCC head office in China. There is a huge amount of payment they have done. Then there is high transfer pricing risk in royalty payment since such amount has been paid only for using technical know-how other than providing any service in Sri Lanka. Now, you have to think for getting a technical know-how for Chinese company, the head office, why we have paid like this? The STCC, which is a company in China. Then what is the reason for paying of this much of amount for the as technical know-how, which is LKR 140 million? Highly material. Now see the analysis of tax impact on this. Then there is high transfer pricing risk in royalty payment since such amount has been paid only for using technical know-how other than providing any service in Sri Lanka. Under this situation, if STCC charge any higher amount of royalty. From SECC, the only income tax liability is payment of 10%. Where I have taken the 10%? Double taxation treaty between Sri Lanka and China. We have applied the same thing for the question of income tax as per the Article 12 subpara 2 of the DTA between Sri Lanka and China. Therefore, the charging of higher amount of royalty by STCC save 18% tax for SECC and SRCC group because income tax rate applicable for SECC is 28%. What is this situation? This is explained something like this. Now for SECC there is a royalty expense. Royalty expense. What is the royalty expense? LKR 140 million. For remit this LKR 140 million, we have to pay under DTAA between China and Sri Lanka 10%. You all know that. Now, due to paying of this, the withholding tax or income tax as per the treaty, this total expense is allowable deduction. This is allowable deduction in the SECC business income calculation. Since this is allowable deduction, SRCC group can further increase this 140 million. Can further increase this 140 million and it can be claimed as what? It can be claimed as the expense which is a deductible expense for the business income calculation. Now, for this arrangement, for this royalty they are paying 10%. Now, it is deductible. The SECC income tax rate is 28%. Now, for such kind of expense they are paying only 10%. Now, what is the saving for them? It's the 18%. By increasing this technical fee for 150, 60, then they are having this benefit. I think it's clear. It has well explained the reason behind that answer. High level of analysis of scenario as per the legal provision, impact on non-arm's length price. This is the impact of non-arm's length price. This is 28%. If they have charged higher value, they can only chargeable at the 10%. But if it is less, the business income will be increased from that. But due to this arrangement, they have reduced the business income. Then if they have increased this much more, they are having a benefit in like this 28 tax rate. For royalty 10%, it's the net of the 18%. Okay. Then, therefore, royalty paid on technical know-how for using of technology developed by Shanghai Technology Corporation, China, by other companies need to compare to check the application of arm's length price. I think it's clear. To check the independent transaction, we have to check the other transactions which STCC China engage in the same kind of the transaction, royalty transaction with other independent parties. Then next transaction, technical service fee paid to STCC India. Now, there are two skilled employees came to Sri Lanka to do this part. For using of skilled staff for mapping the area, LKR 120 million. The same impact as we have discussed. It is since SCCC and STCC India Limited are associated companies. Don't forget that. Every time highlight that. And SRCC holding company group can reduce income tax liability in Sri Lanka by applying non-arm's length price for any transaction between SCCC and STCC India Limited. Again, in my first para, every time what I have done, identify exposure to transfer pricing. Secondly, in this scenario, SECC has made huge payment as technical service, 120 million. It's a huge payment to India Limited. In the given information, the process of mapping has been conducted by STCC India Limited through 2 staff. Then there is a question for 2 staff. For a one, in the question it has given for it's only for 1 month period. Such a thing, why they have paid this much of the amount? Then now you have to think, okay, there may be transfer pricing arrangement. Now go for next one. There is high transfer pricing risk in technical service fee payment since such amount has been paid for 1 month service. Where I have extracted this information from the question. If you have to write a perfect answer, you should read the question very carefully. Then 1 month service provided in Sri Lanka by 2 skilled staff of STCC India Limited. If STCC India Limited charge any higher amount as technical service fee from SECC, only liable for payment is 10% income tax as per the article 12 subpara 2, which is royalties and technical service of DTA between Sri Lanka and India. I may say the same impact which I have explained for the royalty. Okay, then charging of higher amount of technical service fee by STCC India Limited save the 18% for SRCC group because income tax rate applicable for SCCC is 28%. Again same thing. By increasing technical service fee, they can increase in the technical service fee and remitting it to the STCC India, it is an allowable expense for SECC, thereby the business income, even calculating of business income, this is an allowable expense, thereby business income going to reduce. Then from this 120 million amount, they are having a tax saving of 18%. I think it's very clear. Then justify the position with valid argument from the 4th para. We have the 3rd para, we have done that. Then the 5th transaction, interest paid to SBCC on bank loan facilities provided to manage cash flow of Sri Lanka project 45 million. They are providing a loan, bank has provided loan facility, then to cash flow of Sri Lankan project the 45 million. Now again the bank and the SCCC, they are associated companies. See that the exposure to transfer pricing risk, since SCCC and SBCC are associated companies and SRCC holding company, group can reduce income tax liability in Sri Lanka by applying non-arm's length price. It is essential part you to identify. Then next para, analysis of the given scenario. In this scenario, SBCC has applied 15% interest rate on loan provided to SECC, which can be higher than the open market interest rate. Where I have taken this 15%, it's in the question. Very clearly given, the interest rate is 15%. If the interest rate is high, finance cost will be high. If the finance cost is high, it's incurred for the production of income, and within the limitation of section 18, can it be allowable or disallowable? Allowable. Due to having a higher amount of allowable expenditure, the business income is reduced. Then assessable income, taxable income is reduced, then they are paying a lesser amount of tax from this arrangement. I think it's clear. Then the interest expense paid by SCCC project in Sri Lanka totally remitted to China without any tax payment in Sri Lanka, because such payment has been made to financial institution SBCC, which is engaged in providing financial service as business, because the bank has given the loan under their ordinary business capacity. The bank does not have any PE in here, then the bank is not paying tax in Sri Lanka. Then on the other hand, as Bank of SRCC Group, which maintain group bank accounts by all group of company as a pool fund, SBCC should give concessionary interest rate for SCCC Sri Lanka project considering bank guarantee provided by SRCC. This is by my common sense. I got to use the information given in the question. Analysis of information given in the scenario. Then the last para, which is with the recommendation. The interest rate applies for similar kind of loans provided by SBCC to other related parties, including other projects in Sri Lanka, can be used as comparable to identifying arm's length price for testing this transaction and for applying open market value. We need to look at what are the interest rate applied to same and similar kind of the loans given for the same and similar kind of the companies. The task is little bit difficult in practically, but you have to be mindful and write a very practical answer in the examination. Then the last part of that question, the 6, bank guarantee fees to SRCC by SECC for providing the deposit balance in group pool account maintained with SBCC Bank LKR 20 million. Bank guarantee fee. According to the question, this was a financial guarantee because it has given for the short term loans. Then we will see how we are going to write the answer for this under transfer pricing. Then since SCCC and SCCC is an associate of SRCC holding company, again the same thing, group can reduce income tax liability in Sri Lanka by applying non-arm's length price for any transaction between SCCC and SRCC. That is again first thing, identifying of the exposure to transfer pricing. Then second one, the transfer pricing risk. In this now application part, in this scenario, if the guarantee fee payment made to SRCC by SECC for providing the deposit balance in the group pool account maintained with SBCC as guarantee for taking short-term loans can be a payment with more than the market price. Then this is the expense which is utilized for the production of income, then they can increase that. If the expense has increased, your profitability is going to reduce. On that profit before tax, we are doing adjustment and pay in tax. It is extremely advantageable to this the holding company or a group. Then it's very clearly, I am going to explain that again. In this scenario, if the guarantee fee payment made to SRCC by SECC for providing the deposit balance in the group pool account maintained with SBCC as guarantee for taking short-term loans can be a payment which more than the market price. We are charging more than the market price. Our expense, therefore, expense of SCCC is high or low? It's high. For actual service, which is transfer pricing arrangement, reduce the tax payable in Sri Lanka. Now my recommendation, therefore, to reduce the risk of transfer pricing risk, need to compare same and similar type of bank guarantee fee charged for provided on short-term loan to the non-related parties. Short-term loans to the non-related parties. Then this is the recommendation with the pricing method. Now this is the entire question part C for the 7 marks. We have analyzed the transaction, we have understood the what is the exposure to the transfer pricing, and we have applied it to the given scenario with the recommendation. Then we will see from doing this question what are the learning outcomes you have got. In that, key learning outcomes from the question, first one, identify of transactions exposure for transfer pricing risk. That's the first thing. You should identify, okay, there is a transaction with the associated undertakings. Due to having transaction between associated undertakings, there is a risk of non-arm's length pricing. Okay, then it should be clean and clear to the transfer pricing. Now we will see the second thing. Apply section 77 or 76 of the Inland Revenue Act number 24 of 2017, which is for domestic transfer pricing and the international transfer pricing. Without having these two sections, which I have explained very first, you cannot write a good answer. Then third one, identify negative income tax implication to Sri Lanka due to non-arm's length pricing in each transaction. This is that analysis part. Analysis of the income tax reduction. Income tax reduction to Sri Lanka. And the last part, advice on methods how to resolve that transfer pricing risk. How we are going to resolve the transfer pricing risk? By applying most appropriate pricing methods. In the 5 explanations or 6 explanations, I have taken comparable uncontrolled pricing method. Where I have taken this pricing method from the Gazette notification. Okay, this is the full discussion of the pilot paper question 1 part C, which is linked to the non-resident taxation. Please go through this is very small part in the act, but highly testable for your examination. Then this is the complete of the question 1 of the pilot paper. With this, I am going to the rest of the part, which is again the coming up with the separate area of the syllabus, tax administration. Tax administration part. In the tax administration part, what is my target again? Target is to, with the questions of the pilot paper, to give you an insight on the theoretical areas of the tax administration and the case law provision. The issue is, not the issue, it's a benefit. Benefit is you can bring the act to the examination. Then I am highly recommended to you all to for act tag these provisions separately. I am not telling you to by heart on all these things, it's difficult. If you are in the practice, you can. But in every time, even for us, we need to refer the act and give a good answer. If not, all these things are not in our head. Then take the maximum benefit out of the orphan book referential examination. The extract word in the even in when I am doing lecturing, all the things are from the act, nothing other than from anything. We don't have anything other than that. Therefore, tag your act according to the particular administration provision, payment of tax, the registration of income tax, assessments, taxes in default, penal provision, all administration review, all these things please tag. And please have the fair enough, the reasonable knowledge of the referring to the act and writing the answer. At least you have to know, okay, there is a section like this. If not at the examination, I am not telling you to go here and there and check the provision and all these things. But be familiar with this provision before the examination. It's really helpful for you to take 7, 8 or 10 marks given in the examination. Now, tax administration and case law provisions, these are the two areas, pilot paper question 2, part C and D, and the pilot paper question 3, part C, Roman 1, Roman 2 and Roman 3. These are very easy. I need to explain little bit, that's all. Okay. Then here the pilot paper question 2, C and D. Before going for this part, then I need to explain, taking a little time or 5 minutes, what is the procedure for this tax administration, because lot of students think that it's very difficult to remember and all these things. Then why it's difficult to remember? Because you don't know the flow. If you know the logic behind that, if you know the flow, then it is not difficult. Okay. Then the tax administration, which is 10% area of your syllabus, tax administration. In this, the first thing in the tax administration, you have to, the first thing is the charge in section. Under charge in section, section 2, charge in section, which is section 2, then you should be a person who is liable for, who is having taxable income and who is chargeable with final withholding payments. If so, you have to register with income tax. Register with income tax, maybe CIT, corporate income tax, maybe IIT, individual income tax, maybe PIT, partnership. Then register with income tax. For registering means you need to take a taxpayer identification number, which is 10. This is in section 102 and this is in section 103 of the Act. After you register, now okay, I have registered, then can I be in freely? No. Then if I have taxable income, what I need to do? I need to pay tax. I need to pay tax. If I need to pay tax, how am I going to pay tax? There are 3 methods of paying tax, or rather 4 methods I will specify. First one is the by way of withholding tax. Second one by way on the quarterly installment payments. Quarterly installment payments. And third one on assessments. And fourth one dates as per the specification by CGIR, as per the specification by CGIR. These are the 4 methods. Now you have registered for tax. Now you have to make the payment for tax. If you have make the payment, is that enough? Is that all? No, then you have to file the return. You have to file the return. In the Act, there are the returns, which is capital gain tax return, which is on transaction basis, capital gain tax return, mentioned in section 93 of the Act. Then next one, self-assessment tax return. Self-assessment tax return. Self-assessment tax return again in section 93. Then we are having for this quarterly installment payments, we shall file a set which is estimated statement of estimated income tax return. Statement of estimated income tax return. These are the, we are having pay returns, withholding tax return, we are having, but the main 3 returns are there. Now you registered for tax, pay tax, file the return. Now after you file the return, department can raise assessments. Department can raise assessments. There are 4 kinds of assessment: self-assessments, second one default assessment, default assessment, advanced assessments, and next amended or additional assessments. Amended or additional assessments. Now, why these assessments are raised? Because maybe our self-assessment tax return, what we have filed, CGIR has not agreed with that. Then they are raising the assessment based on their judgments and opinion. After the assessments, can we, as a taxpayers, can we wait? No. What we can do, we can make appeals. We are not agreed with the assessments, then we are making appeal. For this appeal procedure, in the Act very clearly mention it as the tax administration review. Tax administration or administrative review. Now, tax administrative review, which is the appeal procedure, it goes to from Assistant Commissioner, then CGIR, then Tax Appeal Commission, then Court of Appeal, after that Supreme Court, Okay. Now, taxpayer can take these actions. After that, what happens? CGIR going to implement recovery procedures. Recovery procedure is only for the additional tax? No, with penalty charge. This is the entire syllabus area which you have to know, if you are a good student with the tax administration part. Student with the tax administration part, you should know all these nitty-gritties. Then for this, this is as per the Inland Revenue Act number 24 of 2017. Other than that, likewise, for the open book referential, there are 2 gazette notifications which is applicable to tax administration part. One gazette notification for appointment of the authorized representative. The second gazette notification for the what are the duties which taxpayers can allocate to the authorized representatives. These are the gazette notification 2064. One is 63 and the 2064. One is the 58. Then both these 2 gazettes are issued on 1st April 2018. With this syllabus area, you should know these nitty-gritties of these 2 gazette notifications. Okay. Then this is the logic behind this. This is the flow. With this understanding, because we don't have much time to explain, this is highly theoretical, then we don't have much time for explain this highly theoretical part, but I will explain this part with the question as much as possible. Okay. Then here penalty, again I need to divide penalty under section 176, which is a general penalty provision. Penalty there are for the non-payment as well as the late payment. Non-payment, late payment, together penalty. Now we are having a new provision, interest. Interest on this late payment and non-payment, and the refunds. Refunds also a very important provision in the Act, which is section 150, It is for the refunds. Now for the self-assessment, which is in section 132, default assessment section 133, the advanced and amended advanced assessment section 134, amended or additional assessment section 135. These are the relevant sections for the assessments. And in the self-assessment, there is a time bar provision of 30 days from the date of return which you have filed. Then for the default assessment, no time bar provision. Advanced or the advanced assessment, no time bar provision. Amended or additional assessment, there is a 30 days time bar provision. Again with the two circumstances under 4 years and 2 years. Please go through these areas. The twice tested in the previous syllabus, twice tested, please go through. Highly important. All these are highly important for you. Okay, now with this ground level of understanding, we will go for the pilot paper question. Firstly, question 2, part C and D. The main question of the question 2 is the value added tax. In the value added tax question, we have done part A and B. Now we are going to do part C and D. It's for the 4 marks. 4 marks, what's the question? Explain the different method of income tax payments specified in section 82 of the Inland Revenue Act number 24 of 2017 with due dates for such payments, and highlight the penal provision for non-compliance. Now there is 4 marks question. How many requirements? 3 requirements. Did you realize that if even it's a 4 marks, if you didn't answer for the all 3, then you all penalizing with the marks. Okay. Then action verb is explain, which is in tier 2 comprehension. What is the meaning of explain? Make a clear description in detail, revealing relevant facts. Okay, you have to explain based on the relevant information. How we are taking relevant information from the act. Then analysis of question. There are 3 requirements. 3 requirements as explain the different methods of income tax payments as per section 82. That's the first thing. Second one, due dates for payments. Third one, penal provision for non-compliance. How many marks for all these 3? 4 marks. Time 7.2 minutes. Now see, it is asking methods of payment. We are having 3 basic methods and 1 is specific methods of payment. I will explain that one by one. Part C, answer. Different methods of income tax payments is specified in section 82 of the Inland Revenue Act number 24 of 2017. There are 3 methods as per section 82. What is the section 82? Methods and time of payment. Then 3 methods as I explained: by withholding, which is in section 86, by installment payment, which is in section 90, then third one on assessment at the time of the assessments are issued. Other than above 3 main methods, in any other case not stated in above 1, 2 and 3 on the date stated in the notice for payment by Commissioner General of Inland Revenue. That's the 4th one, which is as per the specified by the CGIR. These are the 3 main methods and 1 specified method. You should remember these things. Then payment of tax under category by withholding. Now taking one by one, we will see what are the explanation and what is the penal provisions and what are the due dates of payment. In the case of tax payable by withholding, there are 3 main categories of payments under section 83, 84 and 85. 83 for withholding tax deducted by the employer from the employee, it's a PAYE tax. 84 on investment, withholding tax on investment returns like rent, royalty, interest. Likewise Section 85 on service fee and contract payments. These are the main 3 sections for the withholding tax other than the final withholding, the payment. Section 88, it is telling after deducting relevant withholding tax what's the position. Then main 3 charging sections are section 83, 84 and 85. Then the employers and payee who is required to withhold tax from the payment under the Inland Revenue Act is considered as withholding agent. For this purpose, for withholding tax, there are the 2 parties, withholdee and withholding agent. Withholding agent is the person who shall remit to the withholding tax to IRD, and the withholdee is receiving the net amount after deducting relevant withholding tax. Then withholding tax from the payment under the Inland Revenue Act is considered as withholding agent who shall be registered as withholding agent. The person who shall remit the tax to the IRD is the withholding agent. For withholding tax, due dates of payment are in section 86 subsection 1. The withholding tax withheld by every withholding agent should pay to the Commissioner General within how many days? Within 15 days after end of the each calendar month. For an example, for rent, I am the owner of the property. I have given my property for the business purpose. Now in September 2019 rent, if it is September 2019 rent, if the 50,000, the 10% withholding tax shall be deducted, then it is the 5,000, then that 5,000 I should remit to the Department of Inland Revenue on or before 15th October 2019. I think it's clear with the example. And if it has not done, what is the penal provision? It's in the section 179 late payment, section 179 subsection 1. A penalty at 20% of unpaid amount of tax due shall be paid as penalty. However, Commissioner General has granted an extension under section 151, very important section in the Act. I urge you to please, before the exam, please go through this section, extension of time for payment, and paid the tax accordingly. A person shall not be liable to such penalty, but interest is payable on the tax. Now 20% penalty we shall pay, but if that person has taken a time extension, if he cannot pay today, he has extended the time with the approval of Commissioner General. If it is so, then he does not have liability to pay the penalty, but interest of 1.5% monthly or compounded in the half month basis he has to pay. Then the second part, tax payable by installment, very very important. In the Act, as per section 90, there are 4 quarterly installment payments. Okay, they are starting from the, if the year of assessment 1920, your year of assessment if I have taken, for that, for first installment is due on 15 August 2019, and on that day you have to file the statement of estimated income tax return. Second quarter is due on the 15th November 2019, third one 15th May 2020, 15th February 2020, and the final payment is in the next year of assessment, or the final quarterly installment payment is due on the 15th May 2020. Now this is the 4 quarterly installment payment. The final income tax payment will be due on after 6 months of the end of the year of assessment. If it is the year of assessment is ended on 31st March, it should be 30th September 2020. Okay. Then we will go for this part, tax payable by installment, section 90. In the case of tax payable by installment under section 90, every person who is an installment payer should pay tax by quarterly installment if he derives or expects to derive assessable income for any year of assessment. Then due dates of payment, as I have explained, any installment payer whose year of assessment is 12 months period ending on the 31st day of March on or before the 15th day respectively of August, November, February in that year of assessment and the 15th day of the May of the next succeeding year of assessment. Now it is a general provision. Now go for next specific one. Or an installment payer in any other case on or before the 15th day after the each 3 months period. That means if the year of assessment not ended in the 31st March, ended in another period, if it is ended in 31st December, then there the 3 months counting January, February, March. Then for that first payment is due on the 15th April. Then April, May, June, it's due on the 15th July. Likewise, the second provision is there. Then final installment on or before the 15th day after end of the each year of assessment. That means if the year of assessment ending on 31st December in any case, then the payment shall be made 4th quarter on or before 15th January. Okay. Then I have included additional point. Such every person who is liable to pay income tax is required to submit a self-estimate tax, which is the statement of estimated tax from the year of assessment on or before 15th August. It's a compulsory. It's a compulsory. Then penal provision for non-compliance as per section 179. Again, I have previously explained section 179 subsection 1. Now, section 179 subsection 2. The failure to pay all or part of the installment within 14 days of the due date. There is a 14 days gap without charging penalty. For an example, now I will take the practical example. In 2021, we have just finished the 15th August, we have just finished the first quarterly installment payment. Even taxpayers, if they didn't pay the tax, still they can make the payment within 14 days. That means till the 28th August, they can make the payment without penalty, but 1.5% of interest is accruing. 14 days of the due date, a penalty equal to 10%. After 14 days lapse, then the 10% of penalty is coming, 10% of the amount of tax due but not paid. Again, the penalty provision is 10%. Again, there is a advantage to taxpayer. If the taxpayer has taken the time extension, then he is not penalizing by the penalty. As per the time extension taken, he has to make the payment. Then that's on the quarterly installment payment. The type of the payment is the payment of tax under category of on assessment. Then in the case of tax payable on assessment, where any person is with taxable income considering a gain from the realization of investment asset, which is capital gain tax, should be paid on the date on which the capital gain tax return shall be filed. What is the date of capital gain tax return filed? Within 30 days from the transaction, any person who has earned a gain more than 50,000 per month, then per transaction, then that person has to file the return under section 93, return on income and capital gain. That's the one assessment, on assessment, one type of a tax. Second one, where any income tax payer is with taxable income and tax liability which a return of income shall be filed under section 93, which is the return, what is the annual income tax return, the so-called name now? It's a self-assessment income tax return. This is secondly talking about that return, and if there is any balance in relation to tax payable on assessment as per the return should be paid on the date in which is 6 months after end of the year of assessment. If year of assessment ended with 31st March, then final payment should be made on or before 30th September. Then what is this final payment? Then I will come to explain this part a little bit. This is now a taxpayer has made the payment on first quarter, second, third and the fourth. Now year of assessment ending on 31st March 2020. In that he has paid on 15th August, 15th November, 15th February. This is 2019, 2020, and the fourth is 15th May in again 2020, but in a different year of assessment make the payment. Now if there is now here the 100 and 100 paid, then in that sense if there is a balanced tax payment, think that after computing the tax liability for year of assessment 1920 there is 500. Now we have to pay another 100. How we are going to pay on or before 30th September 2020, 100,000, again 500,000 done. That's explained in the second paragraph. Then what are the penal provisions and another explanation. In any other case where taxpayer received the notice, the special condition which I have mentioned, then in any other case where taxpayer received a notice from Department of Inland Revenue, the tax amount mentioned in that notice should be paid on the date stated in a notice. As per the notice, what is the date, what is the payment we have to pay. Then when there is any tax is not paid by the date on which it becomes due and payable as mentioned in above categories, the Commissioner General may send a notice as per section 152, taxes in default. As a taxpayer, you have to pay this much of amount on or before this date. Therefore, then the Commissioner General has sent that, then after receiving that the notice within 21 days you have to make a payment. If not, after 21 days you are becoming a defaulter. Okay. Section 152, default in payment of Inland Revenue Act to the taxpayer demanding payment with penalty and default interest. If the payment is not made within 21 days after service of the notice, such taxpayer is default and Commissioner General has the right to institute the action on the collective. That's why the point of the recovery procedures starting. Okay, then recovery procedures starting, then penal provision on this. The failure to pay all or part of tax due for tax period within 14 days of the due date or by the due date specified in the notice of assessment, penalty of 20% of the underpaid amount of tax due. This is the penal provision. This is in section 179 subsection 1. However, Commissioner General, if granted, if has given the time extension under 151, then person shall not be liable to such penalty, but 1.5% of interest is liable. This is again rather than an answer, this is the explain in a highly theoretical area for you to understand the payment of tax. Then the second part of the question, which is part D, it is asking under the Inland Revenue Act number, it's again 4 marks. That's mean the 3 sections asking for the 4 marks, then you all have to write this kind of answer, you should have a greater knowledge. Under the Inland Revenue Act number 24 of 2017, withholding tax can play a greater role in the economy as a source-based tax. Why it is source-based tax? Because where the payment is deriving, you have to pay the tax. Withholding agent and withholdee there, when the making payment to the withholding agent by the withholdee, at that time the withholding agent is deducting the relevant tax. For an example, owner and the particular, for the rent income example, there is a withholding agent who is the tenant and the withholdee, which is the owner of the property. Then in that sense, the withholding, the tenant is making rent payment to the withholding agent. At that time, the withholdee is deducting the particular amount. Withholdee is if I have taken like this, the investment is a rent. I am taking this rent example. Then there is a withholding agent and there is a withholdee. Withholdee is a recipient. Withholding agent is the person who is making the payment. Then this is the owner of the property, he is the tenant. I think now it's understandable. Then owner is eligible to receive a rent income, but withholding agent is giving the rent income of 50,000. Instead of 50,000, owner is getting 45,000. The 5,000 is going to Department of Inland Revenue. Why this is a source-based tax? At the time of the amount or income deriving, there is a one person withholding agent on behalf of the government to collect the tax and pay to the government. At the time of source arising, tax is arising. That's why it is a source-based tax. Okay. Then it is asking can play a greater role in the economy as a source-based tax to increase government income on tax revenue. Explain your view on the above statement by discussing provision of WST under section 83, 84 and 85 of the Inland Revenue Act number 24 of 2017. It's for the 4 marks. Now, just you have to write what is section 83, 84 and 85, how it is become a source-based tax, then how it is help to the economy of the Sri Lanka. How it is help to the economy of Sri Lanka? Because there is no additional cost to collect. There is a separate intermediary person who is withholding agent, collect tax and pay to the Department of Inland Revenue. And we are receiving, if I am a Department of Inland Revenue, I am receiving income at the periodic or a monthly basis, because this month payment I am receiving on or before 15th day of next month. Then without a time gap, I can collect the money. These are the benefits of the withholding tax. We will go for the answer, which is action verb is explained. Now you all more familiar with these action verbs. It's tier 2 comprehension. Explain, make a clear description in detail, revealing relevant facts. You need to analyze the facts. Now we will go for the answer. As per section 2 subsection 1, charge in section of the Inland Revenue Act number 24 of 2017, income tax shall be payable for each year of assessment by a person who has taxable income for that year, or a person who receives a final withholding payment during the year. this is a charging section where withholding tax has came into the effect from the 1st April 2018. Now we will see the bigger picture of this. By including withholding tax provision for charging section, tax collected from withholding agent has legislated with effect from 1st April 2018. Withholding tax is a source-based tax. Why? As I have explained, which is charged at the time where income is arised or derived. Following are the main 3 sections where withholding agent shall collect withholding tax at the time of payment by withholdee. Section 83, as I have explained previously, withholding by employer, deduction of PAYE from employment income. Section 84, withholding from investment return, governs the WHT on investment returns such as dividend, interest, discount charges, the annuities, the natural resource payment likewise. And section 85, withholding from service fee and the contract payment governed by section 85. Under above provision, tax collection process operated monthly basis. Now all under this 83, 84, 85, the tax are collected in the monthly basis or transaction basis to withholding agent such as employer for employment income, banks and financial institutions for interest income, companies for dividend income, etc. These are the withholding agents. In this context, without any collection cost to the government receives income from WHT monthly from withholding agent, which I have explained, as a better source of revenue collection of government other than waiting to collect taxes from taxpayers. Then, due to this reason, was the second advantage, WHT is a low cost and easy operating mechanism for government to collect the future due taxes from taxpayers and to identify the tax real income to the country in a timely manner. Based on above, WHT increases the government revenue with less cost. Okay, this is the analysis of how withholding taxes help to the collection of the revenue collection of the government. Okay, now we have discussed the pilot paper, the tax administration part in the question 2. Then we need to go for the next part of the paper, which is again tested tax administration part in the unseen question in the 50 marks question, section 2, question 3. Then again in this part to write this particular answer, then you should know a theoretical knowledge of this tax administration part with reference to return filing. That's the main part. Now you can see, now we have looked into section 84, 85, 83, and again we have looked into payment of the section 90, payment of tax, the return filing part, the return filing due dates, penalties in the previous question, which is question 2. Now you can see, if you have the knowledge and if you can memorize the particular provisions in the Act, by using the Inland Revenue Act at the examination, you can take the maximum benefit out of that. Then why I am telling like that? Because even for us, without having a theoretical knowledge, we cannot write a particular tax opinion or a recommendation. Then for you to write a good answer, there should be theoretical knowledge. Then where should you take that theoretical knowledge? From the Inland Revenue Act. then at days with you all at the examination, then you can tag that and please have that maximum benefit out of the open book referential, which is, I am repeating this for your easy reference to pass the examination. Then we will go for the pilot paper question 3. Part C, Roman 1, 2 and 3. Actually this provision is one of the very patriarchal provision, and we love this provision because it's a benefit to the taxpayer. It's benefit to the taxpayer. Then this patriarchal provision has tested by the examiner from you. Now we will see that this is the question. Before the question he has given the information relevant to the scenario. The filing the date of the annual income tax return for the year of assessment 1819. Then within the 1819 to file the annual income tax return, which is your self-assessment tax return, which you shall file within 8 months after end of the year of assessment. If the end of the year of assessment means if the year of assessment ended in 31st March 2019, then you shall, or a particular taxpayer shall file the income tax return on or before 30th November 2019. That's the period of filing of income tax return. Okay, we will going forward. 2018-19 was held on 30th November 2019. True, it's correct. A Saturday. That's where the question is coming. A Saturday where the Inland Revenue Department, which is IRD, was closed to the public. On Saturday, it is not their working day. Then now the requirement. What is the requirement? Explain your view supporting with relevant provisions of the IR Act number 24 of 2017, and there is a 2 requirements in a 1 question, and whether the return was filed on the due date or not based on the following scenarios. Now you have to explain with relevant provisions. That's the first thing. That's mean what relevant provision mean? You should need to apply theoretical part. Then you should know what is the theoretical part relevant to this answer. Then in that, as a recommendation, as an advice, or rather as a conclusion, you have to provide whether this return filed on Saturday, because due to the 30th September being a Saturday, then if you have filed the return after the Saturday, that's mean in working day immediately is a Monday. Then in that sense, whether that return is the consider as the return filed for the due date. That's the question asking. Then we will go for Roman 1. The examiner has given 3 different kind of the scenarios for the 3 marks. Okay. Before go for the reading the question, I need to go for the analysis of the question part. Then in that the analysis of the question, I may say it's for the 3 marks. 3 separate questions for the 3 marks. All are under you have to write the particular good answer by applying the provisions of the Inland Revenue Act and by giving the conclusion. That is my answer format for the 3 marks. We will read the question. Now requirement is explain. All of you all know on the action verb what is the explain. Even in the previous question I have discussed. Then I am not repeating this again in this part. We will straight away go for the question. If the company submitted its annual income tax return on 2nd December 2019, okay, now we will see what is the due date for filing the return, 30th November 2019, which is on the weekend Saturday. Now the question is asking by the examiner if the company has filed the return on 2nd December. That's mean immediate, the working day after that, that's mean it's Monday. This the question asking. Now it is, it's submitted to the CDMU particular unit, which is the handing over the income tax returns. Maybe online it's separate in the RAMIS system, and for manual return submission, particular maybe in Anasala, maybe CDMU unit, you have to submit the return and obtain the acknowledgement of the return on the same day with IRD as IRD day stamp. Now see the day acknowledgement date, the date of acknowledgement, date of acknowledgement, date of the, sorry, date of receipt of the return, it's as the mentioned as the 2nd December. The seal has put as the 2nd December. Now the examiner is asking the whether on the return which we have filed on 2nd December is considering as a return file for the due date. Then you should have to apply a provision. What is the legal provision as per the Inland Revenue Act, which is section 119? I will go for that answer first. Then in that part C, due date of filing annual income tax return for year of assessment 18-19, because I need to come to this answer with the little bit of explanations. Okay. Now see the answer. Filing date of annual income tax return for year of assessment 18-19 was held on 30th November 2019, a Saturday where Inland Revenue Department was closed for public. That is, I have taken from the scenario itself. According to the section 93, return of income and capital gain of Inland Revenue Act number 24 of 2017, every person shall file with the Commissioner General not less than 8 months after the end of the each year of assessment. All of you all know that the due date for the filing of income tax return. And after that, end of the each year of assessment, a return of income for the year, while the section 126 subsection 1, that's mean the return, the Inland Revenue Act, every person chargeable with income tax, every person chargeable with income tax, maybe that person has as the taxable income or final withholding payments, then they are in the charging section, they are chargeable with income tax. If so, under this particular section, section 126 as well as section 93, they shall furnish the income tax return to the Commissioner General of Inland Revenue. Then should furnish the tax return in the form specified by the CGIR, either in writing or by way of electronic means, that's mean under online system, revenue, administrative and management system, which is RAMIS. Then these are the particular provisions in the Act. Now how am I going to apply this to the answer? Now my question is, due date is 30th November. We have filed the return on 2nd December, then whether under these circumstances the return is particularly it's the return filed on due date. That's the question. Now go for the answer. The particular section is 119 subsection 1, very important section. In that, as per the section 119 subsection 1, which is due dates of Inland Revenue Act number 24 of 2017, if the last day for performing an act is specified under the Inland Revenue Act falls on a day on which the department is not open for the public for business. Very clearly this issue has addressed in the Act. The Act shall be considered timely of its performed on the next succeeding day on which the department is open for business. Can you see now? Is the client has done the correct thing? Yes, client has done the correct thing. How I am telling like that because it's the extract provision under the section 119. Now section 119 subsection 1 talking about if we have handed over the return to the Inland Revenue Department. The subsection 2 talking about if we have posted the return in the register post for the Department of Inland Revenue. Now see that provision. As per section 119 subsection 2, the declaration, appeal or other document, not only for the returns, all these documents, this provision is applicable. Other than payment, for the collection of payment, other than the section 151 which is extension of time, they are not willing to give the extended period. Shall be considered filed on the date it is stamped, a postal stamp. What is the date in the postal stamp? It should be considered as a date of receipt of the return to Department of Inland Revenue. As received by the department or in the case of filing by post, and the second thing also addressed, if it is filed by the post within 4 days of the date of the post mark. Now see the within 4 days, it's the 30th November. If we have filed the return, that means 30th November we have put the return to the post, then it's the 1st December, 2nd, 3rd and 4th. The 4 days given, for the postal of the income tax return. This is the provision. Now I will go for the first question, and the particular answer for the first question, as now first question I have repeated again. If the company submitted its annual income tax return on 2nd December 2019 to Commissioner through the Central Document Management Unit of IRD and obtain acknowledgement of return on same day with IRD with stamp, then see the answer. In this scenario, company has submitted its annual income tax return mainly on 2nd December, the return manually on 2nd December 2019 in writing to CDMU of IRD following the proper channel. What is the channel? Manual submission of the annual income tax return and procedure as arranged by IRD to collect of the return. That means to the CDMU, the particular unit we have handed over, our part done. But on 2nd December, further, company has obtained acknowledgement of income tax return on the same day. Then on this date of receipt or date of acknowledgement is on 2nd December 2019. 2nd December 2019. Now this is all information I have extracted from the scenario. Now go for my conclusion. Since 30th November 2019 was a Saturday which department was not prepared to, the department was not open to the public. That means department is not prepared for the obtain the return. It's a close. Then open to the public for business. Manual return submission on 2nd December 2019 to the CDMU of IRD is considered as, see, it has bolted, underlined, this is your conclusion, is considered as return submitted on due date as per the section what? 126 subsection 1 of the Inland Revenue Act number 24 of 2017, which read together with the provision of section 119 subsection 1 and the 119 subsection 2 of the Inland Revenue Act number 24 of 2017. Since this is handed over manually, actually section 119 subsection 2 is no need to quote, but section 119 subsection 1 you should quote and write answer. Now what I have done in my answer, first I have explained the theoretical provision. section 119(1) and 19(2) and section 93 and 126. Then after that, since the questions are tested in the same provision, I am not repeating the theoretical part in each answer point. What I have done, first explain the theoretical part and then go for the application part, because all three questions are tested in the same provision of the Inland Revenue Act, which is section 119 subsection 1 and 2. Again, my particular answer format is take the theoretical provision from the Inland Revenue Act, take the information from the scenario and explain the scenario. Finally, I have provided the recommendation or conclusion or advice to my particular client. Okay. Then it is the part Roman 1 answer in the part C of the question. Now we will go for the next Roman 2 question. If the company submitted its annual income tax return on 2nd December 2019 using the online facility under REMIS and obtain an online acknowledgement of return through REMIS on the same day. Now we have not filed, even the 30th November you can file the return till the entire day, and even after that, because online the portal has opened like this situation. Now in this situation, online portal has opened for the filing of income tax return till 2nd December 2019, since this provision, that means 30th November is a Saturday. Now what I have done very easily, I didn't go for the department, but I have filed the return in online format. Then I have received my provisional acknowledgement. For your easy reference or your practical the matters, I will explain. When we are filing the income tax return or any return in the online, we are receiving acknowledgement. It's not the permanent acknowledgement, it is provisional acknowledgement. At that time we are receiving as the acknowledgement, we have filed the return. Then after that, after some time they are verifying all these things, and where the Department of Inland Revenue send in the permanent acknowledgement to us. That's for your additional information. Now company has filed the return online. Then is it considering as the correctly or a return filed on due date? Of course it has. Why? Then the 30th November is the 30th November is the weekend. The IRD has not opened for the public. Then therefore the 2nd December is as the manual submission. In the same way, this has considering as the return filed on due date. We are the channel is online channel. Now we will see the answer. If the company submitted this annual income tax return on 2nd December 2019, the using online facility under REMIS and obtained online acknowledgement of return through REMIS on same day. It's obvious, it's in the same day. Then see the analysis of the answer. Again same thing. I have highlighted the theoretical provisions previously. Now it's the application part of the scenario. In this scenario, company has submitted its annual income tax return on 2nd December 2019 using online channel available with REMIS and also following the real online procedure. That means to go for you have to log into the REMIS system under e-services and put your SSIDs and passwords of the company, and after that under the return and the particular return management part, then filing of income tax return. Under that procedure you have submitted the return. Then further company has obtained online acknowledgement of income tax return on same day, that means 2nd December. That means all the particular procedures has followed. Again under section 119 subsection 1, this is a considering as a deemed to be considered as a return filed on the due date. We will see that part. Since 30th November 2019 was a Saturday. All these benefits given, if the last day of the return filing is the Department of Inland Revenue is not open for public. If it is only these provisions are coming. Since 30th November 2019 was a Saturday, which department was not open to the public for business, and also return can be submitted to IRD either in writing or by electronic means within the stipulated time period as per the section 126(1) of the Inland Revenue Act, which is the filing of returns. Act number 24 of 2017, which read together with provisions of section 119 subsection 1 and 2. In here again for this scenario section 119(1) is applicable of IR Act. The return submitted on 2nd December 2019 using online facility is considered as return filed on due date. Now, one particular part on manual submission on 2nd December, second part is the electronic submission of the 2nd December. Both are considered as a return filing on due date. Now, again justifying here, online return submission also getting same advantage received under manual process without different treatment. I think very clearly it is explained to you. Then go for the third 3 marks question under requirement of the explain with the legislative provisions of the Inland Revenue Act by confirming whether you have filed the return on due dates or not. The Roman 3 of the question, if the company sent its annual income tax return by registered post, addressing to the Commissioner Central Document Manager, which is you are talking about CDMU on 30th November 2019, and Commissioner of CDMU received it on 3rd December. This is the date they have received, 3rd December 2019 they have received the return. Is it in line with the provision of section 119 subsection 2? Yes, very clearly it is in line with the provision of section 119 subsection 2, which is if the return has sent by post within 4 days of the postmark date, then it has received to the Department of Inland Revenue. The particular unit CDMU, they have received the acknowledgement is, then it's coming to the 3rd December. Very clearly it's a return filed on the due date. Okay, we will see the answer. I have explained the procedure and the patrical way. Then we will go for the answer. The question, if the company send its annual income tax return via registered post addressing to Commissioner CDMU and on 30th November, and CDMU received its on 3rd December 2019, and CDMU issued the acknowledgement of return on same day with IRD stamp. This is a scenario. Now the answer, in this scenario, company has submitted its physical annual income tax return, that means the manual hard copy tax return to the post office on 30th November 2019 by using postal channel. Now, first one manual, second one online, third one postal. If the examiner the tested all 3 provisions in the act, which is given a wide variety of knowledge to you, the 100% knowledge, application knowledge on this, the particular section. With using postal channel, which is available for taxpayer on to submit return. Further, company has obtained register post letter acknowledgement receipt with postmark date 30th November. In question, it's very clearly given. They have posted it on the 30th November, which is Saturday. Then, from the post office. However, registered post return has been received by CDMU of IRD on 3rd December 2019 and CDMU issued acknowledgement of return on same day with IRD day stamp. Now 30th November it has sent, then 3rd December the IRD has received to particular unit. Then it's all the information I have grabbed from this scenario. Then the conclusion part, since the return has been submitted to Postal Department on 30th November 2019 and obtained postmark on the same day, that means 30th November, and also posted return has been received by IRD within 4 days. That's why this provision is really important. Within 4 days, that means 30th November to 3rd December, it's within 4 days of the date of the postmark, it is considered as return submitted on due date as stipulated in section 126 subsection 1 of IR Act, which reads together with section 119. Actually section 119 subsection 2, you can quote even subsection 1, but the main provision is section 119 subsection 2 of the Inland Revenue Act. I think you have a better knowledge or a wide knowledge on section 119 subsection 1 and 2. Now we will go for what are the key learning points you have taken from these questions, the tax administration questions, what we have did in the pilot paper question 2 and pilot paper question 3. Then understand the theoretical provisions of payment of income tax, which is time payment of income tax, time of payment and penal provisions applicable for underpayment or late payment, which is in the first part. We have looked into the what are the due dates of the payment mentioned in the Act by way of withholding tax, by way of the on assessments, by way of quarterly installment payments, and fourthly the date specified by the Commissioner General of Inland Revenue, and the time of payment for the withholding tax on or before 15 days of the subsequent month, for quarterly installment for 15 August, 15 November, 15 February and the 15th May of the subsequent year of assessment. If the year of assessment ending other than the 31st March, then the date of the payments are different. Then after that, the penal provisions under the section 176 and all we have looked into. Then penal provisions applicable for underpayments, penal provision applicable to late payments we have discussed. Now that's the first part. Secondly, understand importance of withholding tax to the economy. Under section 83, 84 and 85, how withholding tax being a source of payment, how the government can collect the income very quickly by applying the withholding tax provision. We have discussed that. Then understand the patrical application of due date of return filing. Now under section 119 subsection 1 and 2 we have looked into how patrically we are applying the due date of return filing, even the self-assessment tax return which the taxpayer has to file on or before the 30th November, if not on or before the 8 months, the end of the particular year of assessment. But if there will be the weekend or the IRD not open for the public, then there is a requirement for or advantage for taxpayer to file any other day as specified in section 119. Okay, I think under the tax administration I have explained the flow of the tax administration, and by doing these two parts of the questions, as a student, I think you have got the very much of the wide understanding of the application of theoretical part and the how to write a particular answer by using your open book referentials. Okay. Then we will go for the next part. In the sense of the next part, I am again coming for my session outline. Actually, today is the last session by me for the all of you all as the webinar series of the CA Sri Lanka for the revision part of the SL3 corporate taxation. In this, the main focus was giving the side knowledge of the brief knowledge of the theoretical aspect of the entire syllabus. I think I have done that. Then that part with the main core part of the revision program is to conduct the discussion of the pilot paper. The entire pilot paper we have discussed up to now. Now I am going to go for my third the requirement, which is analysis of question in the pilot paper. For your reference, take in 5-6 minutes, I will explain or I will analyze the pilot paper. Now analysis of pilot paper, because I have done the pilot paper based on the different topics of your syllabus. Now I need to take this into one topic or the flow of the questions like as it is in the paper. We will see that section 1, question 1, non-resident and international taxation part has tested by you. In that, computation of tax liability of non-resident person, we have taken the 10-mark question. It's for the permanent establishment. Part B, write in part on taxes applicable to non-resident person, justify with double taxation treaties and case law provisions. For 7 or 8 marks we have done. Under that, when doing that part, I have mentioned there is one part of that service fee. I need to clarify it again. Then the particular clarification I have done in the presentation. In that, the answer should be corrected as follows. I have put it under the red. All the other explanations and all are correct, but in the final part, further the set service fee payment by SCCC, that means SCCC is a non-resident person, to SRCC, a resident person, should not be, the corrected as should not be liable for withholding tax under section 85 subsection 1b. Then this also the correction, it's a correction of the part we have discussed. As I have promised to you, I will come back to this again. Then I have did that part. Then part C, application of transfer pricing regulation to the particular associated person. I think you can remember. That's the section 1 with entire information given under non-resident taxation and international taxation. Then section 1, question 2, value added tax and income tax administration. Value added tax I have done in my first session. Administration part I have done now, completed. Then C, part A, assessing of balance VAT payable for a tax period, taxable period, we have done that. Part B, tax administration under VAT tax. In that we have discussed on the VAT assessment and the refunds. Part C, income tax administration, we are methods of payments and the timing of payment. Part D, withholding tax provisions under section 83 on employment, 84 on investment returns, 85 on the service fee and contract payment. This is a summary of the question 2. Now you can see, now you all having a clear picture on how the pilot paper the questions has tested, what are the syllabus area and what we have done. This is actually to refresh your knowledge and given a clear summary to you what we have done. Then section 2, question 3, based on pre-seen, your part 1, your very interested part, computation of balance tax payable by resident company for 25 marks. I have done that. Part B, enhanced capital allowances under 6th schedule to act under tax planning and advising, and the business decision making, which is 10% of your syllabus area. We have done that. And the part C, the just finish off, which is income tax administration and filing of self-assessment tax return and the due date. This is the main focus of the revision session under webinar series to you. I think by doing this webinar series, you have got the numerical knowledge on the SL3 corporate taxation, and I am repeating for the 5 points to you all. First thing, have your open book referential before your examination. In the first day I have explained, and again when doing the session going by going, I have explained again very specific open book referential for the each topic. The Inland Revenue Act number 24 of 2017, Value Added Tax Act number 14 of 2002 with subsequent amendments, and the Gazette notifications and the NBT Act. These are the open book references. That's the first thing. The second thing, be a smart student at the examination. Manage your 3 hours and 15 minutes. Read the question very carefully, starting from the requirement, and analyze the question. If there are sub-questions in the same question, write the answer for the whole sub-question to you to take the relevant marks from the marker. And that means you shall write the extract for the examiner's requirement. That's the second thing. Third one, be ready, be prepared for the examination, go for your theory note, take the help from this revision and also theory sessions, and have a good knowledge before the examination. I am always telling, don't wait till the last moment. Please take the maximum benefit out of the time available to you and ready for not only for this subject, for the whole subjects. Get ready very early, then you are ready for any contingencies. That's the third point. And the fourth point, you should very clearly understand the situations or the scenarios, all the information given in the scenario. These are very practical. These are not the visualized thing. These are practical scenarios. Have your common sense little bit. Very importantly, have answer format in very lightly in the format, in the flow wise. As I have explained in my all the session, the first theory, then scenario, then application with the decision, recommendation or your advice. The position of you is the tax consultant in this paper for 3 hours and 15 minutes. These are the summaries which I need to tell you all, and this is the advisors which I have to tell you all. And thank you very much for being with me under CA Sri Lanka, the SL3 Corporate Taxation Webinar Series. And for all my dear students, wish all the very best for the upcoming October examination, and I hope all of you all will pass with the flying colors. Thank you.